We're excited to share some new ideas with you here on Retiring Well, talking about renting versus owning life insurance. What does that really mean? Along with that, what you need to know about Medicare, as well as being an executor. If you're an executor of an estate, there's a lot of moving parts there. And then lastly, the neuroscience of advice. So stay tuned as we want to share with you how to plan to retire well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Today I'm going to start by asking you a question. Would you rather own something, an asset, or would you rather rent an asset? So I want you to think about that today as we have a conversation around life insurance. So this is a topic that not very fun to talk about. It's a little bit morbid, but it is important as we think about our overall financial picture that our insurance needs are met. So there's really two main types of life insurance that we'll talk about. We'll talk about our term insurance, and we'll talk about permanent insurance. So term insurance, think of this like renting. You're going to rent your insurance policy for a set number of years. That could be 10 years, 15 years, 20 years, 30 years. Going to be dependent on whatever term length you're looking at. After the end of that term length goes, the policy expires. Everything you've paid in rent, if you will, you're not going to get any of that money back. Same if you have some sort of group term policy through your employer. You pay into that policy for a number of years. When you get to retirement, that policy goes away. Not that term is bad. Term certainly serves its purpose. It's a great source for some of our younger accumulator clients because you're able to get a really great policy for a low cost with a lot of leverage, meaning you can get a lot of death benefit. The downside and kind of the morbid piece of the term policy is really the only way you get a benefit out of it is if you were to pass away. And of course, nobody wants to plan on that, but that's really the only way you're going to get any sort of benefit from these policies. So these certainly have their place as far as being able to get a lot of insurance for a fixed low cost. However, as you start to accumulate more wealth, you want to explore some of these different options that are out there. One nice benefit to a lot of term policies nowadays, not so much the older ones, but if you've purchased a term policy over the last few years, they likely have something called a convertibility feature. What that convertibility feature allows you to do is actually take your term policy, convert it to a permanent policy, and not have to go back through underwriting. So as we tend to get older, insurance starts to get a lot more expensive. Our health may have changed. We may want to have a permanent policy in place for various reasons that we'll get into. So if you have an old term policy, that's not to say cancel it, it's not useful. You can actually use that to your advantage by converting it to a permanent policy to leverage other goals that you may have. So permanent policies, what are those? Well, these are going to be our insurance policies that have a cash value element inside of them or some sort of investment element inside of it. So they want you to think about it as renting a place to stay or you're buying a house. So when you buy a house, you may have a little bit larger of a monthly expense. So when you're paying your mortgage payment, there's a few elements inside of that. You're going to have a portion that goes towards things like escrow, so your taxes and insurance. You may have a portion that goes towards your interest, and you have a portion that goes towards your principal. That principal is really kind of the most important piece of that mortgage, is that's what's actually building the equity. The same applies to a permanent life insurance policy. You make your monthly payment, quarterly, annually, however you decide to set that up. A portion of that payment is going to go to some sort of internal cost, what we would call cost of insurance. A portion is also going to go to some other benefits we may add onto the policy with different riders that we'll talk about more detail here in a second. But a portion of that also goes towards building up that cash value. That cash value is going to grow not only by you saving into it, but it's also going to grow by accumulation and interest growth. So these policies that have cash value also have an investment element so we can leverage that for our overall retirement planning. The key here, though, with these policies is not just the cash value, it's the other benefits you can get inside of those. So you can go add things like long-term care benefits to them, accelerated death benefits, critical illness riders, all things that you may want to use down the road. So again, what you can potentially do is take your term policy, convert it into one of these policies that may be more specific to other goals that have changed over time. Where we can also use these policies is for some of our higher income earner individuals. So let's say you're a young doctor as an example. You're phased out of being able to save to our Roth IRAs in the traditional manner. Maybe you don't have the IRA balances to convert, or you don't want to for tax reasons. This is another way you can start to build tax-free growth inside of your portfolio. So when we're looking at these types of policies, I'm not saying one is better than the other, but what I do want you to take home is over time your goals maybe have changed, your financial situation's likely changed, and just as you would look to refinance your mortgage on a property, it's probably worth having a conversation to maybe look at refinancing your life insurance and trying to leverage other goals that are out there in structuring your insurance, not just so much to have death benefit in place, but also how can we have more benefits from our policies, either from a cash accumulation standpoint for retirement planning or a protection standpoint for a long-term care event that may be coming down the road in 10, 15 years. So if you'd like more information on how these policies work or want to have a conversation review, we'd be happy to schedule some time to discuss in more detail. Thank you.
Make the most of Social Security. Although Social Security isn't designed to cover all of your income needs, it's an important part of the retirement puzzle. Download our free booklet on the Social Security decisions at cen-wealth.com and learn how to optimize Social Security for your situation, why timing is so important when it comes to your benefits, ways to supplement your Social Security, and more. There is no cost and no obligation. Simply go to cen-wealth.com, scroll down, and click the download link to get your free booklet on the Social Security decisions.
Are you paying more than you should? When we help with retirement planning, part of our process includes implementing a tax reduction strategy to help limit your liability, increase your cash flows, and preserve your principal investment. Our tax planning team has required licensing and is well versed and up to date in the ever-changing tax landscape. Don't pay more than you should. Remember, planning is the first step to succeeding. Plan to retire well.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
Let's talk about everyone's favorite topic, Medicare. If you're approaching the age of 65, I'm sure you've been bombarded with flyers in the mail and potentially even phone calls trying to get you to sign up for this plan or that plan and so forth, and you might not have any idea on which route is the best route for you to take. So today I want to talk about the differences between Advantage plans and supplement plans, because in my opinion, this is the most important information that you need to learn when transitioning to Medicare. So first, just a brief overview of original Medicare. You probably already know, or you might not, but there's a couple different parts to it. We've got Part A, which we call that your hospital insurance. There's typically no monthly premium for that. And then Part B, we call that your doctor's insurance, and there usually is a premium for that. The base premium for 2024 is $174.70 per month. Now, original Medicare doesn't cover everything, okay? There's a lot of, and could be some substantial out-of-pocket costs if you just have original Medicare. One that comes top of mind is the co-insurance on the Part B side. So if you recall, we have an 80-20 split, meaning that Medicare is going to cover 80% and you're going to be on the hook for 20%. So that's 20% of those doctor's visits for that heart surgery and so forth. And it's not capped. There's no limit to how much you could spend. So that's why most people, they don't just have original Medicare, they add on something else. And that's the decision that you have to make. Do I go with an Advantage plan or do I go with a supplement plan? So let's cover those differences. Starting with the supplement plans, they're also called Medigap plans, and basically what they do is they pick up the gaps that original Medicare doesn't cover for you. And there's a whole alphabet of plans ranging from Plan A all the way to Plan N, and they have different coverages and so forth, and they all have different premiums. But Plan G right now is basically the Cadillac or Rolls-Royce, if you will, of the supplement or Medigap plans, and it covers basically everything that original Medicare doesn't cover except for that Part B deductible, which is $240 a year. So what are the pros and cons of these Medigap plans? Well, the first one is their freedom from networks, okay? So if you have a Medigap Plan G, you can travel anywhere in the country, and as long as that doctor accepts Medicare, you can get whatever cover or whatever service you need done anywhere in the country. Okay, you don't have to worry about HMOs or PPOs or anything like that. There's also the low out-of-pocket costs. Okay, I'm going to have a monthly premium with the Plan G, and I'll pay the first $240 a year. But after that, if it's a qualified medical expense, you don't have to worry about it. It's all covered with that Medigap plan. And then lastly is that there's no prior authorization. So that is a huge one for these supplement plans. You don't have to jump through any hoops with the insurance company. If you need that service, you get it. Okay. Some cons with the supplement plans is the premiums. They're higher than the Advantage plans. Also, everything is not rolled into one. So you'd have to add on dental, vision, hearing, and so forth. You also have to add on prescription drug plans. So, with the Advantage plans, it's a little bit more bundled. So those are the main cons, pros and cons with the supplement plans. Now let's talk about the Advantage plans. The Advantage plans work totally different. Okay, they take you out of original Medicare and you're with a private insurer. Now, by law, these private insurers have to cover everything that original Medicare would cover, but your private insurance now becomes the primary insurer, not Medicare. So big advantages for these Advantage plans is everything is lumped into one, okay? Dental, vision, hearing, prescription drugs, and so forth. And another advantage is they're typically zero or very, very low premium. So you can get these plans at no cost to you in a lot of situations. Another positive is the costs are capped. So in a really bad year, you wouldn't pay more than $8,550, and there's some plans that offer a little bit lower caps as well. The big cons though for Advantage plans is that you have to have that prior authorization for some services, which means you often do have to jump through hoops to get the service that you want with the doctor you want. Another thing is you got to pay attention to networks. There's HMO plans and PPO plans. So is your doctor a network or is he not? That's something that you'll have to think about as well. So there you have it. We've got two different options. What decision or what choice makes the most sense for your situation? If you have questions, please don't hesitate to give us a call.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
We implement a holistic approach for the best combination of all interconnected retirement planning components.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
Here at Centennial Wealth Advisory, we feel education is paramount to wise decisions. Your retirement should not be left to chance. Our team of advisors has put together an educational half-hour-long program to discuss the many complex decisions you'll be faced with in retirement, including income, investment, estate, taxes, and healthcare. Tune in weekly to learn about all these topics and so much more, or visit cen-wealth.com.
Sadly, becoming an executor comes after the loss of a loved one, and this can already be an emotional time, but now if you're left in charge of the finances, then it's this additional pressure that you might feel. But it should be an honor to be selected as an executor. This is you're fulfilling the final wishes of a loved one, and they have the faith that you can complete their legacy and pass on these assets on to whomever they've designated with their estate. But just keep in mind that if it's not your desire to be that, even though you've been named, there are options. You can go and find another person. You can resign from that. You can assign multiple executors, or you can hire a professional. There are actually companies that specifically will serve in that role as the executor of an estate. Now, obviously, there's going to be costs involved that would be taken into consideration, but you want to make sure that you're coming up with some type of decision and proceeding with that, whether that's you being responsible or finding others. So if you're in a spot where maybe you're unsure of whether you want to take on that responsibility, here's some questions you might want to think over. First, are there potential conflicts or disagreements amongst the beneficiaries? Sadly, in any case, when family and money is involved, there can be some disagreements. So do you want to be in that position overseeing that and helping to distribute everything? Do you have the time and the availability to fulfill these different responsibilities? Again, it's going to take some effort on your part and time that you may or may not have based on your life circumstances. Do you have a professional network? It's very valuable when settling an estate to have an estate planning attorney that you can trust to help facilitate some of this. There's maybe a financial advisor that can help answer questions along the way, and likely a tax professional, as there's going to have to be tax returns completed and different tax ramifications if you distribute assets one way versus another. And are you aware of the tax and legal implications of it being an executor? So these are different questions to be thinking over. You'll need to make the decision in a timely manner. There's legal implications if you're unsure and the decision is drawn out too long. You want to create a list of assets. So it's going to be easy if they had a home, their personal residence, that's not a problem. But what about if there's a safe deposit box? What if there's jewelry or some other type of collection of, say, precious metals or artwork or guns or antiques or whatever that might be? You want to document all of these assets into a spreadsheet, and so that way it's clearly defined what those assets are upon passing. You want to include the title on the property for these different positions, as well as then the value at the date of death. And so that could be something that, again, that time factor, if you don't know what the precious metals are worth, well, now you're going to have to go take that somewhere and get an evaluation of what the value is, and then define whether it's a liquid asset that you can quickly get cash for, or is it illiquid in the sense that it's going to take a long time to try and sell that. And so how do you best handle that when divvying up amongst the beneficiaries? Ideally, if you're an executor, you're more of a delegator. You're going to be directing the tasks to the professionals who will then complete the detailed work. The estate attorney, tax professional, they'll be handling that final tax return. Maybe there's a trust tax return. You might need a realtor involved, and again, that financial advisor. So here at Centennial Wealth Advisory, we work with a team of professionals. So quite often we are in this situation where we're assisting a child or whoever the executor is of an estate and trying to help guide them through that with the assistance, bringing in the attorney We have an enrolled agent for tax planning and preparation on staff that assists in that sense, and then we help navigate through how the assets would be handled and what tax ramifications if you went one way versus another. So if you have questions and you're unsure of what to do next as an executor, we encourage you to give us a call.
If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Review your financial situation. What sources of income will you be able to draw from? What are your expected expenses? And take advantage of creative ways to maximize your retirement savings. Explore your Social Security options and get a financial mentor. At Centennial Wealth Advisory, we specialize in retirement planning. Planning is a first step to succeeding. Plan to retire well.
If you fail to plan, you are planning to fail. Plan to retire well.
Make the most of Social Security. Although Social Security isn't designed to cover all of your income needs, it's an important part of the retirement puzzle. Download our free booklet on the Social Security decisions at cen-wealth.com and learn how to optimize Social Security for your situation. Why timing is so important when it comes to your benefits, ways to supplement your Social Security, and more. There is no cost and no obligation. Simply go to cen-wealth.com, scroll down, and click the download link to get your free booklet on the Social Security decisions.
Hey, welcome to the Neuroscience of Advice. This is a super exciting segment talking about what your brain goes through, what your emotions go through, your psyche as you go through and get advice. And this could be in any area of your life. Obviously, it's easy for us to talk about when people come in and meet and talk about financial advice. So that's what this is going to be, but I think it will apply to other areas where you might seek advice. So when we think of financial terms and the neuroscience of financial advice, what you'll see across the board is that there's different approaches to that. And so I know you might have been in a situation where you met with a financial advisor and their approach was just selling. All they wanted to do was sell you. They didn't want to really hear or talk or listen. They just wanted to sell you a product. Okay, so that's one approach. The next one would be maybe you get a little bit better advice and you start getting into those financial advisors that want to plan with you. And so here we're going to have to get some more data. We're going to have to get more information about you in order to help you make better decisions. And then the third approach is coaching. When you move all the way to the coaching experience of financial advice, I think you've hit the goal. This requires, a good coach requires a lot of information, a deep understanding of the abilities, the strengths, the weaknesses of their player. And a financial advisor, if they're coaching, they're not going to just stop and coach with the financial piece because that's important, but there's a bigger human experience that we all get to go through life with. And so if we don't focus on that holistic experience, then you miss the ability to get really good advice. Maybe you could take a second and just be like, hey, I'm working with a financial advisor. I'm going to grade them. Are they just selling me something or are they being my coach? Okay, and so there's a scale of 1 to 10. Maybe take a moment and grade. The next thing is, when it comes to advice is, what are you hearing from your advisor? Are you hearing nothing but the mechanic? that's very technical, that are using words that you have no idea what they're saying? Or do you have the guide that's going to be empathetic and listen and hear and say, okay, here's what that means, and use different words? You know, I think a good financial advisor will move the needle between both. When I'm meeting with an engineer, I'm going to put my mechanic hat on. Okay, they need to see the details. They need to see the understanding of what the plan is going to be. But when you meet with that maybe potential widow that never dealt with any of the finances, or you know, that situation where they just didn't have any experience and anything financial makes them uncomfortable because they don't know about it, then maybe we want to be more of a guide. But when you're in getting advice, when a financial advisor can recognize when to be the mechanic and when to be the guide, I think you're going to be most at ease and get the best kind of advice. You know, they say soft skills help on this, and I think soft skills are the hard skills. It's really hard to have good soft skills. What soft skills am I talking about? Empathy, okay? Storytelling, communication, listening, curiosity, creativity. You know, if a financial advisor has all those things, they're really curious about you, they're concerned about what you're trying to do, they feel with you, not for you, and they really try to accomplish what you're trying to get to, the place that you're trying to get to. Now those soft skills have actually helped you in the process, because now you can make better decisions because you're at a different level of comfort. You know, what sets us apart? Well, the words we use set us apart. We're unlike any other creature on this earth. We have the ability to think and then to verbalize and to use not only verbal, but also nonverbal communication. And when you're in a situation where you're trying to learn and you're trying to figure stuff out, if you're getting lambasted with these huge words that are unfamiliar to you, that you don't understand, then that's going to be hard for your brain to understand the decisions that you might want to make for your financial future. And so being able to use words that will impact you in your understanding and find you at that point, the right point, is really important when it comes to giving advice. Now, why is that? Well, because chemicals are going to be released. Cortisol, that's the emotion, the neurochemical of pretty much everything negative emotions, stress, threat, anger. Okay, where is that? Cortisol floods your brain. And the problem with cortisol when it floods your brain is it inhibits your ability to make good decisions. Then we go to the next neurochemical that gets flooded in your brain. That's dopamine. That's pretty much the chemical behind every possible addiction, okay? It makes you feel good one, okay? The next one would be oxytocin. Why is oxytocin important? Because that actually fights against the cortisol. That actually calms you down. That's the one that builds empathy and trust. And so if that's being released, now you actually have the ability to make better decisions. And then finally, endorphins. Endorphins, you know, is that feel good similar to dopamine, but it also just gives you that ability to connect deeply and build those relationships. So what's the proof in all of this? Well, look at this brain scan. The picture on the left is somebody that is making a financial decision unassisted. They didn't have any help. And then the brain on the right, they are being assisted, okay? Their brain has, this is after 15 minutes. And the only part of that brain on the right that you see that's red is the auditory part. They can't hear you well enough because they're listening so carefully. So you know you've gotten the right kind of advice if you are trying to listen so carefully and hanging on every single word of the person giving you that advice. So I hope this is helpful, and as you go through your pursuit of getting advice, have a great day.